another week of the weekly Forex forecast. This week we have some fundamental that is going to move the market, especially out of the US dollar. So let's check the Forex factory. So the one we have on Monday, we have this Swiss franc CPI on Monday. So the previous one is 0.2 minus 0.2%, whereas the forecast is 0.5%. So on Tuesday, not much fundamental, but the one we have on Tuesday that is very, very important on Tuesday is the CPI news. That is the US dollar CPI. As you can see, it is indicated with red, so it is a high impact news. And next week, this is what will determine the USD movement, whether you are going to break out on the DXY or you are going to reject DXY resistance level. So the resistance level, I will show you where it is. So we have the CPI print on Tuesday. The previous one, even though they anticipate a positive result out of the CPI, because if you see the previous CPI month over month is minus 0.1 and the forecast is 0.5, but on the year over year is 6.5. They anticipate a slowdown. Why they call CPI month over month, the previous one is 0.3, whereas they anticipate a stronger CPI right there. So on Wednesday we have the US news, also the news out of the US. That's where we have the core retail sales, the Empire State Manufacturing Index, and the retail sales month over month. Yeah. Don't forget we have GBP CPI 2 on Wednesday, and then on Thursday we have the unemployment news out of the Australian. We have the core PPI, that's producer price index month over month, and the normal producer price index month over month. So guys, I think that's what we have next week. But the most important one out of all this news, let me put the filter, let's remove this, let's apply it. So the most important one next week is the one on Tuesday. That is the CPI. The CPI is going to be a busy week. Yeah, we are going to have a busy week, but the most important one right here is the CPI month over month, year over year, and the core CPI. Then we should be expecting the day after, that is on Wednesday, we are expecting a move to, that is out of the US dollar, when they will release their core retail series. But this is the most crucial one next week. So you have to focus on Tuesday. What's the CPI print on Tuesday will determine the whole direction and bias of the US dollar. So, but we have to be reactive, so you don't have to predict the news. So you have to be like, okay, after the news, what is the next move? Not before the news, this is what the news will print. If you understand, so you have to be reactive, not how do I want to call it, not predictive. You understand? So wait for the CPI print on Tuesday, and then it's going to show. But prior, before the CPI print, we might see the continuation of US dollar strength before the CPI news. So if you check the DSY, this is the DSY right here. As you can see, we are at the 7-year breakout at this particular area. So this is a very, very solid area. So it's either we have a rejection at that particular resistance level, because if you check this area, is a very solid resistance level right here, as you can see. So we are the resistance level right here. So it's either we have a breakout of that particular resistance, or we have a rejection of that resistance to the downside. So it depends on the CPI print on Tuesday, that's when we'll know that okay, we now have a breakout, or we now have a rejection of the DSY. So we are anticipating the result of the CPI print on Tuesday. So that's when we know the particular direction or the next move of the DSY and of the what we call the US dollar. As you can see, this trend line also serves at the support level right there. So we have a break of this trend line here, then we have a retest. So it's either we break back the 7-year breakout, or we reject at this particular area. So that's all about. As you can see, when we are anticipating a news like this, the US dollar or the DSY find a way to put itself in a range. So after the news, we'll now see a breakout. That's when we now see the beginning of that particular move right there. So let's check at our first pair for this week. So the first pair we are going to look at this week should be gold. So on gold, what we are anticipating the forward. So on gold, we can see that it has what we call a flag pattern at this. You can see the formation of flag pattern here at this particular area. So what we are anticipating is a downside movement on gold. So we are anticipating a retracement at this particular area. We are anticipating a retracement to this area, then a continuation to the downside. So this is how flag pattern looks like, something like this. And a break to the downside. So that's a flag pattern right there. So a breakout will a breakout at this particular area. So that's what we are anticipating on gold, and then our target is at 1831. So we are anticipating a move to the downside on gold after creating a flag pattern at this particular area. So here we might see with the rejection coming in at this particular area, that is the bearish rejection coming in at this particular area, because after it rejects at this bottom of this flag, then we now see what we call a rejection. So we might see what we call a continuation move to the downside at this particular area, which will give us move to 1831 level. So that's what we are looking to trade on gold this week. So the next pair we want to look at is Euro USD. So Euro USD, nothing much on Euro USD because it's in a dangerous position. So what I mean by dangerous position is because when you check this, you see that it's at the support level right here. As you can see, we have series of support level right there. So it's at the support level. So there are two things we are looking at. It's either it reject here or it break out to this particular area. But you can still use something to confirm is because on trend line we can draw like two trend line is valid. So let's put another trend line at this particular area. So if you want to trade the continuation to the downside on US dollar, so you have to wait till US dollar reject at this particular level. So if it reject at this particular level, which means we might have a breakout to this level, and then on Tuesday, if we see the positive CPI prints, then we might likely see the rejection to 1.05209. So if we have a negative CPI print, it means that this particular support level is going to be respected, which means that we are going to continue to the what, to the upside, which means that the DSY will do what, DSY will reject to the downside. So that's what we are looking at on Euro USD for now. So but we have to be reactive, not try to be predictive at this particular area. So we have to wait till maybe Tuesday when we see the clear direction of the EU, then we follow. The next one we want to check out is the GBP USD. GBP USD before the CPI print on Tuesday, we might see the continuation to the downside movement, which might continue complete the neckline move, because if you check the overall direction, you can stop right here USD. So here we are looking for the continuation to the downside on a particular pair. So we are going to enter this trade if you are trading the continuation to the downside. So this is where you enter when you allow you to do some retracement. So you'll be like any retracement you see to the upside and you see a rejection at this particular area, should be opportunity for you to look for the downside movement to 1.18434. That means it still have some like 200 pips to the downside movements at that particular area. So this is what I'm looking at on GBP USD before today. This movement might likely happen before the CPI on Tuesday. So let's see how it goes on. So after then if the CPI print comes out positive, we might see the break of this particular neckline to 1.13775, or we see a rejection that will break the double top level. So let's see how it goes right there. So that's my analysis on GBP US dollar. So the next one we are looking at is AUD. So AUD, if you see, and another thing I want to say, the most of the news report that have come out of the US dollar should give us a hint that the CPI might actually comes out positive. Yeah, and that will give the Fed an edge to do what, to increase the interest rate more likely. But as we say, we have to be reactive. So what really happened right there is that on AUD USD, we can see a breakout of this particular level right there in the 4-hour time frame. As you can see, it has break to the downside. There's another thing we can see right there, which is the head under. As you can see, the first shoulder, the second shoulder, and the head. So any retracement you see here should give you should be an hint for you to look for a bearish setup at this particular area, because we might see a series of a retracement to the upside at this particular area, and then a rejection at this particular level to the downside. So this is the head and shoulder on 4-hour time frame on AUD USD, and then it gives us hints that okay, we might first actually look for the bearish movement to this neckline level at 0.6875. Pick up that neckline to 0. It goes right there. So that's my own analysis on AUD USD. I keep on want to say prediction, but I'm trying not to use that word prediction. So it's actually a analysis, not a prediction. So on SND USD too, as you can see, we have a breakout of this, and last week I told you guys that you guys should look for a retracement before the continuation to the downside move. And if you see all the US dollar pairs, most of them did the retracement. And if you check the retracement of this one, this actually rejects at 61.8 or 50% Fibonacci retracement level. Let's check. Okay, it rejects at 38.2. If we pick the Fibonacci, if you pick the retracement from here, well, if you pick it from here, it's actually reject at okay. It's actually reject at, let's say, the 50% Fibonacci retracement level, but the right spot to pick it, this is the peak, so it reject at 38.2, almost the mid of 38.2 to 50% retracement level. That's when it's rejected. So after the rejection, I told you guys that okay, so we're looking at on this particular, we might see a retracement to this particular area and a continuation to the downside to 0.62196. So that's what we are looking at before the CPI print comes out negative. Then we might break all this one. If it come out positive, then you might see a break of this particular support level right here. So this is what we are looking at on SND USD. So the next pair we are looking at is US dollar. So this on US dollar card, if we have US dollar strength, I'm not going to trade US dollar card, but this is my setup. If we have US dollar weakness out of the let's say the CPI print comes out negative, this is what I'm looking to trade on US dollar card. So if the CPI print negative, so what I'm doing, I will just look for a retracement to the upside, then I'll follow my rejection to the downside right there. So this is what I'm looking at. If the CPI print comes out negative, a retracement to this level, and then a move to 1.30249. So this is my setup. Actually, if we have a negative CPI print, so all the rest setup, these setups are the setup if we have the positive CPI print. US dollar USD card is the only setup if we have the negative CPI print on Tuesday. So that's what I'm looking at on US dollar card. So the next one we want to look at is the US dollar yen. So Japanese yen weakness. So last week, this is what I said we are looking at last week, and it's still going around that particular level, still not break out that particular level. As you can see, 1 2 3 4 5. So from Monday, it even closes to the upside. It even closes as a bullish candle on Friday after rejecting this low. So which tells us that US dollar JPY might move to 134.059 from 131. That's we still have like 300 pips move to the upside. Don't forget time frame. So if we were to look at the 4-hour time frame, so on the 4-hour time frame, maybe just a little retracement before we see the continuation to the upside move at that particular area. So you see a retracement to this particular level, I might see a retracement back to this low, then we'll see a move to 134.59. So if we see a breakout of this level, we should be anticipating 134.059. So if we break this particular resistance level, then we should be anticipating the second target at 137.506. So that's what I'm looking at on US dollar JPY. Since it fails to close below this level last week, so our analysis is still very much right to the upside. So the next one is on AUD JPY. AUD JPY. So last week we analyzed that we're anticipating the upside move on AUD JPY. So it still closed above that particular level also as the yes, JPY did also. So as you can see, it still closes bullish on Friday after rejecting this low of 90349. So we are still anticipating the movement to the upside. If it breaks this particular level, then our target still remain 94702 right there. So if we use the let's use it for 1 hour. As you can see, this is 1 hour frame. You should actually see a move to the upside at this particular area, because as you can see, we have rejection at this level, we have rejection at this level too, we have rejection to the upside. So if we see a breakout of this particular trend line right there, then it will test them. We should actually see a move to the to the upside. So the next pair I want to check out is Canadian dollar JPY. So due to the Canadian dollar strength and JPY weakness, we should see the continuation to the upside on this particular pair right there. So after it tests the low of 9663, 671 or 600, we have a strong level to continue to move to the 100 level. So 100 level, that is when we have is where we have the particular solid resistance level right there. So what we are getting on Canadian dollar JPY is to the upside. So here, this is what we are looking at, because this is the resistance level right there. So any retracement you see to this side should give you an opportunity to look for a bullish setup to 100. Then here we might see a rejection at this place, a strong rejection that will break this particular support level, or a breakout of this particular zone. So here some others are sitting down at this particular place, especially the 100 level. Hope you understand. So any retracement you see should give you opportunity to go for bullish setup to 100 level. So after then, you now wait for maybe a rejection or a bullish breakout right there. So the next pair we want to check is the Australian dollar Swiss franc. So here, after breaking the trend line twice, the first breakout is there, the second breakout is at this particular area. We have two things that might eventually happen at this particular area. Is either we see a break to the upside, or we see a break to the downside. That's not actually break, but we have the break of this trend line already, which tells us that the momentum to the downside is higher than the one to the upside. So let's see how it goes. If it breaks down, we should expecting the 0.020 or 60 60020 right there. So that's what we are looking at on so the last one we want to check out right here is the Australian dollar. I see we have a breakout of this level, the breakout of this particular resistance of right there. As you can see, this is a support level. Then we have already break the support level, which might eventually becomes the new resistance. So here we can say that we have a minor resistance level, which might push the price to retest this particular resistance level. Then we might see a move to 0.90300. So here the sell is valid at this particular area. Just wait for retracement. When the sell is no more valid is when it breaks this particular area to the upside. Then you know that the sell is no more valid at that particular area. But if it's still at this area, if you still retest this area, then you have to wait for it. So another you can do here is you can put your fib retracement to the high and low of this. So this is the high and actually this is the low. So you can, if you see with rejection at any of this level, then you add the continuation. The thing is that we have Canadian strength, that's Canadian dollar strength, in our radars right now. So if you see a retracement here, any retracement you see should be an opportunity for you to look for a bearish setup to 030. So if you are new to this channel, please click like and subscribe. So we have to keep the comment section busy. So just any of your opinion you can drop on the comment section. Please help keep the comment section busy, and don't watch this video without liking. Please click on the like and then the subscription bell and turn on the notification in case I drop any video, because I'm still preparing on dropping some tutorials video about moving average, about the trend line strategy, about all other strategies. So I'm still preparing it, so I will be dropping it soon. So a big thank you to everybody that has been sharing these channels to your friend and family. So don't forget, we have the CPI print on Tuesday, and that's what we are anticipating this week. So after the CPI print, they will know the next direction of the US dollar. And don't forget to be reactive, not predictive. So have a lovely weekend, guys.